gentlemen, Katie here with the Traders Club. Welcome to the market update. I hope you guys enjoying your weekend in this Valentine's weekend. Hope you guys are enjoying your lovely time with your loved ones. And market is surely making things great for this weekend for the bulls. And the market is up. S&P is up about 18%. I think maybe Dow's up 20% or something like that. And the Russell 2000 is up 24% since the December low. And we're up here close to 280s. I think this is a scenario that most people didn't think it was going to happen, right? A lot of people thought that there might be at least a retest of the December low. A lot of people thought that, you know, there's no way that after that kind of decline, we're going to see this kind of recovery. But this is something that we've been talking about, right? Since this is from January 5th, 2019, right? This is something that we've been talking about, how we're probably going to see this kind of V-shaped recovery without actually coming back and testing the retest of lows. And a lot of things, actually, this analysis came about and the forecast came about with this recent, not recent, but in that early January, this move. Remember, we saw a gap down and then we saw a gap up. Market was up down 2.6% in one day. And next day, market was up 3.6% next day. And something we talked about in that video is still up. I don't remove any of my videos. That video is still up. You can go and watch it. And why I was bullish and why I thought that this V-shaped recovery is going to happen is because something changed with that very, very fast counterattack. Because we saw a big gap down. We saw a flush. I mean, that day, everything was red. Not to mention, I mean, we've been in this just massive, massive drawdown, right? So, I mean, the sentiment itself is totally bearish. There's so much fear for the bulls to just gap it up. Not only gap it up, was able to fill this gap and thrust it higher above it. Remember, we've been talking about, you know, something that I've been talking a lot about gaps is that when the gap gets filled, many times, most of the time, that gap fill act as resistance. This time around, what happened was we actually thrusted above this gap. Because remember, this was a gap down here. Not only we thrusted just a little bit, it just kept going up higher above the gap. After we already made 2.7% run since this low, right? And so that was analysis in January 5th, 2019, why I believe that we're going to see this V-shaped recovery, the best case scenario, going all the way to 300 with these minor term pullbacks and some shenanigan up and down moves. And that's kind of what we've been seeing here, right? We saw some minor pullbacks, some shenanigan. You can see that pretty much all week. Back in late January, we saw gap ups and downs, but it resolved to the upside. You know, something we've been tracking, we've been tracking together in these market update videos was this neckline, right? Drew this neckline early December or late December, early January, right? So then you can see this is the neckline that bears wanted to protect. Well, bears was not able to protect it, and then we had this downtrend resistance, right? Bears was not protected either. So bears have lost a lot of its ground, gave up a lot of its real estate. And here's another chart I want to talk to you guys about. This is a chart I screened this early January, and this is something that we've been talking about here. 200 SMA, you can see been acting. It has a strong resume, meaning it was strong resistance here and support. So basically, late 2011, it was a level of very strong support, and then 2016. Very, very strong support. In 2019, that was a level. We do not know it yet at that moment if it's going to support or not, but we have to keep that in mind that this has been acting as strong support. And not only that, I've done very, very long-term analysis, and a lot of those long-term analysis, I was talking secular trend, major primary term trend, those analysis led me to believe that this is gonna be the bottoming signal, right? And this is today that I've just screened on Friday, and this is a chart that I actually been tracking this chart with my members every single week, right? Every single week. Remember where this indicator was? just down here, just extremely oversold level. And you can see this thing just really screaming higher. You can see how it has a just nice bounce there and just right on that moving average. So we've been tracking this every single week. This is 8th week of bullish run, right? And I remember we talked about this, what, a month ago, right? When this thing came about, we talked about this 3 white soldiers, right? And we also talked about that because of the 3 white soldiers, now the trend has been much, this short-term, minor-term, this V-shaped reversal trend I'm talking about is so much more strengthened. And that's the time, that was the time that I talked about how when we're about 260s or something like that, that we're probably not going to see retest of the low, the December low. This could very well continue to move higher to 280s, right? And we continue to do that with the little resting patterns here and there. See, the difference is that in 2016, you can see that the 3 white soldiers are important because we had 3 weeks of advancement. And those are advancing candles. Those are not dojis or some red candles. Here, when we saw this pullback, we saw maybe 1 week of follow through and then we died, right? Same thing here, 1 week of maybe long bullish candle was not able to continue to see advancement. And then that's why we saw the retest of lows, retest of the lows. Here, with that 3 white soldiers, we weren't gonna see the retest of the low. That's why we've been talking about. So this is here, this was early January, and you can see today where we're at, and that's pretty much playing out perfectly. You see, the thing about it is, I think a lot of people are so focused on these theories of why we should be in this global recession. And the same theories been brought up in 2015 and 16, right? The same people, the same bears are still calling for a crash. While the Dow Jones Industrial Average is only 4% away, and I tweeted out yesterday, I think, 4% away from the all-time high. And these guys are still calling for a major crash. Keep that in mind. These guys were saying the same thing all throughout this run, right? Do you know that from this low to this high, S&P 500 moved 60%? 60. When these guys are looking for a crash, a recession, or bear market, they're looking for 50-55% crash, right? That's what we saw in 2018. We saw 50-55% crash in 2008. 2008 crash, right? We saw 50-55% crash in 2008. So these guys are waiting for 50-55% crash while the market went up 60%. NASDAQ went up 100% since the 2016 lows and the 2018-17 highs. That's stupid, right? You're waiting for a recession while the market moves higher than what the recession would have caused, right? So this is kind of what I'm saying. Once you are convicted of why the market should be in a bear market or crash, then a lot of times you start to ignore some of these signals that you see in a technical analysis aspect, right? So I mean, I'm not saying that you should completely ignore fundamental data, but you should understand market can be resilient much longer than what you expect. I mean, people were talking about interest rates in 2013 and 14. People are arguing that crash is coming any moment. The Fed is going to raise rates. Then what? And the market kept moving higher. That's why one of the things I talked about a lot in the past is the Dow theory, right? The trend is assumed to be in effect until it gives us a clear signal that it has been reversed. It has been reversed. Do we see any clear signal that the trend is reversed? We didn't see that in 2016, right? And we're not seeing, I mean, yes, there's some vulnerability, there's some weakness. Yes, looking in a primary term. And I've done these long-term analysis with you guys as well, right? The 15-year bullish run. And I've actually done long-term analysis back in 2016, right? Five-year bull run is coming, stock market crash not, Dow historical breakout, secular bull market is ahead. All those videos I've done long-term analysis. If you understand secular trend, major primary term, then you understand that when you see the long term, you understand that we are nowhere near in a bear market. We don't even have a bearish trend in the long term. We just had this steep decline, which caused about 20% decline from this high here to the low. And that happens so fast, right? And that's what I call it, a gatekeeper, right? Before a big move, you see this kind of shenanigan happening, right? And this is one of those things of very, very rare occurrence. Remember I talked about having a 10% plus corrections in 1 year. Two 10% plus corrections in 1 year. Having that, the probability of having that is less than 10% chance. Less than 10% chance happened, right? And so what happens is when you see an event like this, because the market is want to make sure nobody is going to forecast this and want to shake as many as people possible before we get into a huge bullish run, right? This is why we saw this fast recovery that happened since 235. We're up about 18% on the S&P since the December low. I mean, 20% run is pretty much one whole year worth of move happening in just, month and a half. And what a tremendous opportunity that was. Except that most people missed out on it. They were not able to participate in it. Good news about the 20% decline is that when you see a 20% decline, statistically speaking, you're not going to see another 20% for at least 5 to 7 years. You may see 6%, 5% or so along the way, but I don't believe that we're going to see another 20% for at least another 5 years. And I believe the market is going to thrive at least next 2 years. Year to date, S&P is up 10%. I believe S&P is going to be up 20, 25%, maybe 28, possibly even 30 in the best case scenario. NASDAQ could do very well 30 to 35. And next year is going to do very well also. This is what I'm planning on right now. What I'm planning on is that I think the market, we're going to see a 5 to 7% decline sometime. I'm not sure exactly when, right? So what I think is going to happen is that we may very well continue to move higher. And the best case scenario, we continue to go about 300 or 290 or something like that in this vicinity. And then you see that 200 SMA, right? This is a 200 SMA, right? Like that. So that's a 200 SMA. Market goes up, hit this resistance area, and then what could happen is we fall about 6%. That's precisely to retest 200 SMA. That's kind of what I think is going to happen if we do see this thing continue to grind higher to about 290, 300. And then at that point, because what's going to happen is so many people have already missed out on this move. As they start to move higher and higher and higher for weeks, a lot of people cannot able to wait any longer. Right? They're going to think that maybe this thing will never pull back. Maybe this thing will keep going like this for all year long. And then they're going to start chasing, right? And you know what happens when the majority of people, when the public start chasing the move, that's when the market is going to pull back to punish them. If that's the case, this thing comes out about 6% and retests a 200 SMA, and it's probably not going to go straight up. We're probably going to see some shenanigan or something like that, and then get back up and then resume with this primary term uptrend. So what I'm preparing right now is I'm slowly unloading my aggressive positions. When I say aggressive position, I mean call options, right? I'm slowly unloading, mostly in the indices and stuff like that, and sectors, unloading some of those, and then preparing and raising a little bit of cash. But my long-term holding shares, these investing shares, which I've been accumulating since 2016 lows and been buying the dips throughout the years, I'm going to be holding that because I've been buying more of those when this thing came down. But the aggressive positions, I've been slowly unloading. If you followed my journal posts, you've seen me doing that with the diamond and the Qs, and then waiting for that 6% decline, and then I'm going to start aggressively loading up with some of these indice calls and the sector calls. Maybe buy some more equity shares, maybe some calls on the equities, and then wait for the next run up higher. You know what I mean? That could go above and beyond 300. So that's kind of my plan, and I think as far as, you know, this thing continuing to move higher, I think there's a good probability of that. I mean, recently I did a blog post, you know, S&P 500 is running into resistance. That post I talked about, we are getting into the resistance level, but this, I mean, so the probability of this thing pulling back is getting higher. Probability of this going higher is getting lower. But market could very well march higher with the odds or with the low odds. You know what I mean? So obviously nobody knows. And I tweeted out like in what, month or something like that, the V-shaped reversal is the hardest to time because you never know when the next pullback is gonna be. I mean, the bears thought the pullback is gonna be here, that didn't happen. Bears thought the pullback is gonna be here, that didn't happen. They thought it's gonna be here, no. They thought here, no. He thought here, no. 200 SMA, no. Right? How many times do you think bears have been adding shorts into this position because into this rally? Because if they thought the recession is coming, there's a 55% crash is coming, they want to make some big money, right? And the market continues to thrive higher, just completely eradicating the bears. And that's kind of what happened in early 2006, throughout the 2016 and 2017. I mean, after Trump took office, I mean, majority of people thought there's no way it's going to be sustainable for the market, but market thrived. Market thrived, and majority of people was not able to participate in the 2017 run. Anyway, so yeah, they've got a couple gaps here, and we'll see how it plays out, but 290 is definitely a level to watch. I think a lot of people are going to be looking for this inverted head and shoulders, and I hate it. I hate when everybody's talking about same thing. When everybody starts talking about these inverted head and shoulders, and then CNBC start talking about it, and then they bring in this guy, this quote-unquote technical analyst who doesn't know anything about technical analysis, and start talking about this inverted head and shoulder formation, and then tells the whole world about it. You know what happens when the whole world thinks the market is going to do something. Market does not like that in one bit. So market is gonna do some shenanigan and just gonna do completely different. That's exactly what we saw with this V-shaped reversal, guys. Everybody thought there's gonna be a retest of the low. Everybody thought there's no way we're gonna see something like that. We're at near 280 on S&P, on Spider, right? This almost everybody is dumbfounded. They cannot believe the market is up this much, this fast, right? All the bears are doing is just whining and moaning, just whining. Like, oh, because of this, because of that, it's unsustainable, the wall of worries, you know? But market is up. Market is up because trend is up. Market is up because a trend is up, guys. Trend is assumed to be in effect until it gives us a clear signal that it has been reversed. And a lot of people don't really understand what the clear signal is. And so, you know, most people kind of, every time you see a little pullback, they get into this tremendous fearful state. Anyway, so that's kind of my take on it. But as I promised, I I'm running a promotion, special invitation, membership invitation for those of you who is been thinking about it, and if you want to come and trade with me here in my club, the promotion is gonna run until late evening Monday, and so it'll be Monday. Market is closed due to President's Day, so the 18th Monday. Late evening, I'm gonna run that promotion until then. So we got the investor and the premier and the VIP. So you got the monthly and yearly, and these are more than 30% off from the original price here. So let me kind of explain to you guys a little bit. First of all, this is my brokerage statement. So this is, I pulled from my my E-Trade account. This is my main account that I trade, and you can see up 42%. While the S&P is up 10%. I'm up more than 4 times more than the S&P. And this is because, majority of it because I will start buying at the lows in early January. And not only that, I was holding a lot of my position. I didn't close out my positions to get stopped out. Because once you get stopped out, especially with this V-shape, because I knew V-shape reversal was coming. So if you got stopped out, there's no way you can get back in now. If you get back in now, you're losing double. Do you know how you lose money in the market? You close out your positions at the lows, and then you're trying to go long at here after missing out 18, 20%. And then when the market pulls back, you're losing double. Not only you lost your money closing out your positions down here, right? Anywhere up here. And then you missed out on an 18, 20% run. And then you start adding your positions here. And then when you see a next pullback, you're losing again. So you're losing, not only you missed out on an opportunity, you're losing double, right? So how I achieved that is not only I was holding my positions, and those positions gained all of its, recover from its losses. And then I was buying more at the lows. So I was actually winning double instead of losing double, right? Close out your positions, buy at the top, and then pull back, then you lose double. You see what I'm saying? And so obviously I was holding all of my long-term shares. I didn't close any of those long-term shares, but I'm talking more of those aggressive strategies that I was doing. And even my aggressive positions, and you guys know that, if you guys have been following me long enough, that I do, I always buy leaps. I always buy enough time on my calls, because just in case there's a shenanigan and I can recover. And I've done this over and over since early 2016. I mean, there are times where I was down 50, 60%, but when I closed it out, I was up 80%. You know what I mean? And not always, and we don't like to go through it all the time, but with trading options, you know what I mean? Sometimes you're willing to, you can't just be like, oh my God, I'm down 20%. You can't start freaking out. I mean, you're trading options. It's what I call wild horse. Win rate, 2015 and 2018, it's a little bit more difficult year for me as far as win rate, but still great win rate, 60%, 69% last year. But you can see 2017, I barely had any losing trades. In 2016, because I mean, these both years, market did so well here. I think 2019 and 20 is gonna be a great year for me as well. This is a report, 2019, this is a member-only report. I actually did this report early January or something like that, before this move actually happened. Why the biggest bull market in history is coming. Technical, fundamental, and cycle reasons why the biggest bull market in history is coming. And I have more special reports for members. I think I've done like 3 or 4. Each video is about hour and a half. Very, very in-depth, technical, fundamental, and psychological reasons why we're getting the biggest bull market ever. And if you watch these videos, you understand not only you're just gonna, follow along with this market analysis and the positions, but you can able to truly understand what's really going on in the long term, in a secular macro trend perspective. If you understand, you have the foundation of the long-term trend, you will not be scared of this short-term movement. You look at these short-term declines, these fast declines as opportunity, right? And this is my current prediction, market predictions here. Yes, it is a predictions. It is a forecast, right? It is a forecast. Some people like to say it's not a forecast because I don't want to offend anybody. It could be bearish, it could be bullish. I don't know what's going to happen. There's a 1987 chart, there's a 2000 chart, there's a 2008 chart, there's a 2065 chart. Yeah, it could be bullish, it could be bearish. I don't know. Well, we're not forecasting. Some people say that, right? On some of the videos that you watch, we're not forecasting anything here. It's not a forecast. I'm forecasting, okay? This is a forecast. This is a prediction. The thing about this, when you place a trade, do you place a trade thinking, I'm not sure it's going to go up or lower, but I guess I'm going to place. Do you place a trade like that? No. You place a trade because you're expecting to go higher, because you're forecasting it higher. Only these traders are scared to be wrong, and so they want to be politically correct. They don't want to offend anybody. They want to be friends with the bears and bulls. They want to incur more followers. So they're like, oh, this is not a forecast. We're just giving you the probabilities. It is a forecast, ladies and gentlemen. This chart was featured in January 8th article, January 8th, 2019, that I'm forecasting about 4,000 in few years. So we'll track that, see if that plays out, but we're doing pretty well so far. And these are some of the market forecasts I talked about here in early 2016 that I was bullish there. And then I got about 3 videos I've done in early 2016, right? In April, May, and June. This is before the Brexit. This is before Trump took office, right? Dow historical breakout, new sector bull market is ahead. And I also did 5 reasons why stock market crash not, and then 5-year bull run is coming. Those videos are all primary term bullish forecasts and predictions, right? And some of these bearish calls here. And then the 15-year bullish run, 2019 is going to be huge. It was early January that I was, so all these, you can check those links there to see those videos and articles. This is a performance. This is based on realized returns each year. And 2017, obviously, you know that I had the best year in my trading career. I was able to do 60%, while the S&P is up 20% in 2017, right? But, you know, we'll see how I do this year. I'm up 40%. If everything goes like I've anticipated, I might even do double my account, but we'll see. I mean, you never know where the market is going to turn, but that's why we you know what I mean? We're going to stick with the long term. We understand shenanigan might come, but we'll maneuver through some shenanigans and up and downs in the market, because there's always up and downs in the market, right? And so these are obviously the regular price of my membership. And so again, this is for serious traders. This is for solemn traders and investors. And this is not for day traders. It's not for penny stock chasers. This is somebody who, you know, is willing to, who understands truly, and it takes work, and is you know what I mean? It's not going to be just volume and price. You know what I mean? The life isn't simple. The market isn't simple. People always like to say, like, keep it simple, stupid, but market cannot be simple. You know what I mean? You can't, if it's so simple, why not everybody make money? Statistically, only 10% of market participants stay profitable. Stay profitable. Anybody can make money here and there, just like gambling, right? Does not mean that they're gonna stay profitable. Usually most people cannot stay profitable, just like gambling, because usually a lot of people kind of take it, you know, trades the market like they're gambling. But anyway, so the biggest question that I get is, what's the difference from these memberships? So basically, the only difference is with the investor, you don't get any option trade setup. So investors only for somebody who wants to only trade stock or invest in stocks, accumulate stocks for long-term growth, right? We're talking exponential growth though. It's not just, so I get into stocks. I mean, you know my Twitter. I got into Twitter in 1950s. I got into Intel at 35s. I got into Cisco at 30s. I got Ralph Lauren at 70s. Some of those that I can just recall right now, but those are the stocks I like to get. I like to buy stocks that are extremely oversold, and then for potential for big growth. I think Intel's $100 stock. I think Twitter's $100 stock. I think Cisco is $100 stock. And so, you know, those are the stocks that I accumulate. And, you know, some people don't want to go through wild swings like, you know, in options. You know what I mean? But if you're a player that you have stomach for option trading, then Premier and VIP is the option there. But with the Premier and VIP, only difference with the Premier and VIP is with VIP, you get real-time alert. So basically, if I get into trade, you get a real-time alert in your email inbox right at that moment. With the Premier, it might not be right at that moment, but since I'm not, like, you know what I mean? I'm not day trading, it might not be even important to get that right at the moment. Some people like to do that, but for Premier, you get trade setups. So I'll tell you, okay, this is a level you want to go long. So I'll give you, you know what I mean? Maybe it will be that day, earlier that day, a little bit later that day, but it'll be just like around that time. You know what I mean? You get the trade setup, and you know, which you'll get details on the Premier, which strike price and all that stuff. With the VIP though, you do get also position sizing. So if I get into, let's say, diamond calls, how many percentage of that allocated of my portfolio. So you also get that with the VIP. So you get a little bit extra with the VIP, but this Premier is the, I have the most, this is the most popular one. I have the most members in Premier right now. So it depending on your needs, I guess. But so those are the, these are the special promotion rates that it's gonna go. And so it's gonna be until late evening on Monday, the 18th. And I'm probably not gonna run another promotion, maybe end of year, but probably all throughout the year. I'm probably not gonna run another promotion after this one. I wasn't gonna do this, but I thought this market is going to be a good year, and I've been getting some questions about it. So I thought I will put out this here just for this weekend. Well, hopefully, if you have any questions, feel free to just click here and you can email me. Otherwise, hopefully you come and trade with me in my Traders Club, and we can navigate the market together. And I never profess to say that I know everything, or you know what I mean, that there isn't any there. You know, I don't make mistakes. I mean, I'm not God of anything. You know what I mean? I'm just human being, just like you. But I think with tools that is available, because I have tools to understand the secular macro trend of the market. I think with that, and then zooming in to the more of a shorter term, mid-term, I think, you know, with that kind of strategy, I think, especially with the market like this, I think you can have to profit very well. And from what I can see, this is going to be one of those things where the market is going to thrive next 10, 15 years. This is one of those times where once you start missing out your entry, it's very, very difficult to get back in. Because remember, we talked about this. You know, I talked about how if you're bearish in 2015 and 16, we're talking just massively bearish. Like people are saying there's going to be a huge recession is coming. How are you going to start going long in 2018 and 19, even with this decline? Because you thought 2016 was so bearish, so crash is supposed to be coming in 2016. Well, now the market has moved up this much. Well, the crash is going to come even bigger now. You see what I'm saying? Once you miss that train, it is very, very difficult to get back in, right? The thing about it is I've been long, aggressively long since early 2016. That's even with this pullback, I had that cushion. But can you imagine people are just chasing this up here? Just going full-blown bullish. Remember I talked about that. Most bears flip bullish in late 2018. In middle late 2018. A lot of cash people who were scared of the market because of Trump and all this stuff, China deal, interest rates, all that other stuff, they flipped bullish into mid 2018. A lot of hedge funds were bearish, right? They didn't perform anything last couple of years. Well, they flipped full-blown bullish in mid 2018, late 2018. This is why we saw something like that, right? This is why this is why if you start chasing and you start missing your levels of entry, then it gets very, very difficult. Because the market is going to do something like this once in a while. It's going to have up, it's going to come down, it's going to go up, it's going to come down. But you know, once you position yourself well, then in this pullback, it's just going to give you more opportunity, and then you're going to continue to accumulate wealth. You know what I mean? As a primary trend continues. Obviously, I'm going to continue to analyze the long term, make sure we're healthy in the long term, right? Make sure we want to forecast that there's no, recession coming, nothing. So we're gonna continue, analyze the market in the long term, make sure they're healthy, make sure the trend is intact, because trend is assumed to be in effect until it gives us a clear signal that it has been reversed. Most people don't know what that means to have a clear signal, right? So we're gonna continue to analyze the market, make sure we don't have the reversal signal. As long as that, we can ride this. I believe market is gonna do very, very well next 5 years and 10 years. And I think S&P is going to do very well for the next, I'm already forecasting about 400 in a few years, but I think it's going to do, and we will have up and downs, we'll have corrections, but I believe that it's one of those times where you start missing out in some of those levels. Once you start going up, it's no way you can get back in. Because if you're very, very bearish, if this thing going up here at 330, there's no way you're gonna get back in here. You know what I mean? So I think this is still a tremendous level to start accumulating longs, and maybe start thinking about growing your portfolio in a long-term investment positions. But obviously, you don't want to chase this after this kind of move. I think sooner or later we're gonna see a pullback. I think when that happens, when the pullback actually comes, that will be the opportunity to start accumulating. But the thing about it is, if you're not trained enough to understand the big picture, when these things are pulling back, you know what? It's going to feel like it could be another shenanigan scenario where this thing coming back all the way down, seeing another 20%. It could feel like that. That's why when people always say, well, this thing pulled back, I want to go long, I want to buy it. But when actually that comes, it gets extremely difficult to actually execute that plan. How many of you guys encounter that, right? You're like, well, I want to buy it. But when it actually happened, you got scared. You froze, right? You froze. You couldn't do it, right? That's what I mean. So I think in that perspective, I'm kind of here to guide you, to lead the way. And we can't just blindly buy it down here, but with enough evidences and understanding these signals, I think it gets a little bit easier to buy those dips. And then understanding, with certain signals, we can say, okay, I think there's a good chance that we could see a V-shaped recovery, right? Then what you do is you start holding your positions, even with this, daily flux. You're holding it, and then you ride it all the way up. And that's kind of what we've been doing here at Traders Club, and that's why I was able to kind of achieve this kind of a return so far. But we'll see how it plays out this year. So if you're inclined to trade with me, feel free to use these promotional rates here to subscribe. If you have any questions, feel free to email me, if any. But otherwise, I'll talk to you next week, and good luck trading next week.